Hey everyone, and welcome back for another deep dive. You ready to jump into the world of high finance today?
Always ready to get into the nitty-gritty.
Awesome, because today we're talking Goldman Sachs.
Oh, yeah, one of those Wall Street giants.
Exactly. We're trying to figure out if their stock ticker symbol GS is a buy right now. So to do that, we're going to look at a whole bunch of sources, analyst reports, earnings calls, you name it.
Really dug deep into the research.
We did, and let me tell you, it's a wild ride. There's lawsuits, climate alliances, all sorts of stuff to unpack.
That's juicy.
It is. But before we get ahead of ourselves, let's start with the basics. What's going on with Goldman Sachs right now?
Well, they just had a killer year. I mean, their latest earnings report shows revenue up 16%.
Whoa, hold on, 16%. That's huge.
Yeah, it blew past everyone's expectations.
So what's driving that kind of success? Is it their investment banking? That's what they're known for, right?
That's definitely a big part of it. Their global banking and markets division, GBM for short, is doing incredibly well. Lots of mergers and acquisitions companies going public, all that Wall Street action.
So basically they're making money hand over fist.
Pretty much. But here's the thing. They're not just an investment bank anymore.
Oh, what else are they up to?
Their Asset and Wealth Management division, or AWM, is also seeing massive growth. More and more people are trusting them with their money, taking out loans. It's a whole different ballgame.
Wait, loans? I thought Goldman Sachs was all about like fancy investment strategies for the super rich, not your everyday loans.
They are branching out, trying to become this one-stop shop for all things finance, kind of like the Amazon of finance.
Amazon of finance. Okay, that's an interesting analogy.
Yeah.
So walk me through this. What does that look like?
Well, it's all part of their One Goldman Sachs philosophy. They want all their different divisions, investment banking, wealth management, even consumer banking, to all work together seamlessly.
So they're trying to connect all the dots, make everything super integrated.
Exactly. Make it easy for clients to have all their financial needs met in one place.
Okay, so they're performing well, and they've got this big, ambitious vision for the future. Should we all be buying GS stock right now?
Well, not so fast. There are some things to consider. Some red flags we need to talk about.
Red flags. Lay it on me. What are we talking about here?
Well, remember, Goldman Sachs is a global player. Anything that happens in the world, politics, economics, you name it, can impact their business.
That makes sense. I mean, they're so interconnected with everything.
Exactly. So we need to look beyond just their financial statements and consider the bigger picture.
Okay, so what kind of things should we be watching out for?
Well, for starters, they're facing a lawsuit from the Federal Reserve.
Ooh, a lawsuit from the Fed. That's never good.
Nope. Creates a lot of uncertainty about their future.
Hmm.
Could potentially cost them a ton of money.
Yikes. Okay, so that's one red flag. What else?
And then there's this new group they've created called the Capital Solutions Group. It's interesting, but also kind of risky.
Capital Solutions Group?
Mm.
What is that exactly? Sounds kind of vague.
It's kind of like a matchmaking service for companies and investors.
A matchmaking service. I'm intrigued. Tell me more.
Okay, imagine a company needs a lot of capital for a new project. This group helps them find the right investors. Or, if you're an investor looking for high return opportunities, they connect you with the right companies.
Oh, so they're playing matchmaker. Interesting. But you said it was risky.
It is. It's a new venture, and there's no guarantee it'll be successful. It could be a game changer, or it could completely flop.
Okay, I see. So we've got the lawsuit, the risky new venture. Anything else?
Well, there's also the whole climate alliance thing.
Oh, yeah. What was that all about? They pulled out of some kind of agreement, right?
They did, and it raised a lot of eyebrows. Some people see it as a sign that they're not really committed to sustainability.
Yeah. I could see how that would be a problem, especially these days when investors are really starting to care about those things.
Exactly. It could hurt their reputation and even make it harder for them to attract investors who prioritize sustainability.
So that's another potential red flag. All right, so we've got lawsuits, climate concerns, and a risky new venture. What's the bottom line here? Should we be worried?
Well, it's not all doom and gloom. Remember, they're still performing incredibly well. But we need to be aware of these risks and factor them into our analysis.
Okay, so it's a mixed bag, stellar performance, but some potential storm clouds on the horizon. What do you think? Should we dive deeper into these red flags?
Absolutely. I think it's important to understand the details before making any investment decisions.
All right, then let's do it. Stay tuned, folks, because we're about to get into the nitty-gritty of these red flags and what they could mean for Goldman Sachs' future.
All right, so let's dig into these red flags, starting with that lawsuit from the Federal Reserve.
Yeah, this one seems pretty serious. What's the deal with that?
Well, it's not just Goldman Sachs, actually. A bunch of major banks are
Oh,
involved.
really? So it's like a group lawsuit.
Kind of. They're all challenging the Fed's regulatory process, saying it's opaque and unfair.
So they're basically arguing that the Fed isn't playing fair.
Exactly. They believe the current regulatory framework makes it harder for them to operate efficiently and compete effectively.
Hmm, I see. So what are they hoping to achieve with this lawsuit?
Well, they want more transparency from the Fed. They want clearer rules and a more level playing field.
That makes sense.
Hmm.
I mean, nobody likes playing a game where the rules are constantly changing.
Right. And for companies as big and influential as Goldman Sachs, these regulations can have a huge impact on their bottom line.
So what happens if they win?
Well, it could lead to a loosening of regulations for the entire banking industry, which could be good or bad depending on who you ask.
How so?
Some people argue that fewer regulations would stimulate economic growth and allow banks to be more innovative.
Okay, I can see that.
But others worry that it could lead to more risk-taking and potentially another financial crisis.
Yeah, that's a valid concern, so it's a bit of a double-edged sword.
Exactly. It's a complex issue with no easy answers.
All right, so we've got this legal battle playing out, which could have huge implications for the banking industry. What about those other red flags? What's the latest on the climate alliance situation?
Right. So Goldman Sachs pulled out of this big climate alliance, and it's definitely caused a stir.
Yeah, I remember reading about that. It seemed like a pretty big deal.
It was. Some people see it as a sign that Goldman Sachs isn't serious about sustainability.
Which is a problem because more and more investors are looking for companies that align with their values.
Right, exactly. And sustainability is becoming a major factor in investment decisions.
So pulling out of this alliance could hurt them in the long run.
Potentially.
Right.
It could damage their reputation and make it harder for them to attract certain investors.
Okay, so that's another thing to keep an eye on. And what about that new capital solutions group? Is that still a potential risk?
It is. It's still a relatively new venture, so it's hard to say how it'll play out.
But it's essentially a matchmaking service for companies and investors, right?
Yep, connecting companies that need capital with investors looking for opportunities.
Sounds like it could be a lucrative business if they can pull it off.
It could be, but it's also a big gamble. There's no guarantee it'll be successful.
So it's a wait-and-see situation.
Pretty much. We'll have to monitor their progress and see how it impacts their overall performance.
All right, so we've got the lawsuit,
Right.
the climate alliance, the new venture, all these potential risks swirling around Goldman Sachs. But they're still posting impressive numbers, right?
They are, which is why this situation is so interesting. It's not a clear-cut case of a company in trouble.
Yeah, it's more like a company with a lot of potential, but also facing some serious challenges.
Exactly, and that's what makes it so important for investors to do their due diligence. Really understand the company and the risks involved.
Absolutely. Well, I think we've done a pretty good job of outlining those risks.
I think so too.
But now I want to get into the nitty-gritty of their financials.
Yeah.
What are the numbers telling us? Okay, so we talked about the risks, but let's get into their actual numbers. How are they really doing financially?
Well, their recent performance has been stellar, as we mentioned earlier.
16% revenue growth, right?
Yep. Both their global banking and markets and their asset and wealth management divisions are knocking it out of the park.
I got to say, those are some impressive numbers, especially given the economic uncertainty we've seen this year.
It really is a testament to their strategic moves.
So break it down for me. What's driving this growth? Let's start with global banking and markets.
Well, with GBM, they're really capitalizing on market volatility. When there's uncertainty, companies are more likely to make big moves, mergers, acquisitions, going public.
Right. So all that activity generates fees for investment banks.
Exactly.
Yeah.
And Goldman Sachs is right there in the thick of it. Plus, remember that new capital solutions group they formed.
Oh, yeah, the matchmakers.
Exactly. They're connecting companies that need capital with investors who are looking for those high return opportunities.
Smart move.
It is. It could really pay off big time in the long run.
Okay, so they're making the most of a turbulent market. What about asset and wealth management? How are they doing?
AWM is also benefiting from the growing demand for wealth management services. More and more people are realizing they need help managing their money.
Especially with how complex the financial world is these days.
Exactly. Plus, Goldman Sachs is attracting clients by offering a wider range of services. Loans, alternative investments.
They really are trying to be that one-stop shop.
They are. Although their platform solutions segment is still lagging behind.
Yeah, that's the one weak spot, it seems. What's the latest there?
They're still facing tough competition in that online trading space,
Yeah.
from established players and those newer fintech companies.
The ones offering lower fees and all the fancy bells and whistles.
Yep. It's a tough market to crack, and they haven't quite found their footing yet.
Okay, so some areas for improvement. But overall, their recent performance is strong. What about their overall financial health? Are they in a good spot to weather any storms?
They do have a solid balance sheet and a good track record of managing risk.
That's reassuring.
But we can't forget about that lawsuit from the Federal Reserve.
Right? That could definitely impact their profitability.
It could. So investors need to keep a close eye on that situation.
Okay, so some good news, some not so good news. What does this all mean for someone thinking about buying GS stock?
Here's the thing. Goldman Sachs is a complex company operating in a complex industry. They have a lot of potential, but there are risks involved.
We've definitely uncovered a few of those.
And we believe the current stock price might be a little inflated. Doesn't fully reflect those risks.
So are you saying it's overpriced?
We're not giving financial advice, but we think investors should proceed with caution.
Fair enough. So what's your final verdict? Buy, hold, or pass?
We're leaning towards hold for now.
Hold. Why is that?
We want to see how things play out with the lawsuit and whether they can turn around that platform solutions segment. Plus, we need more evidence that their One Goldman Sachs strategy is really working.
Solid advice. So for anyone out there considering investing in Goldman Sachs, do your research carefully.
Absolutely. Understand the company, the risks, the potential rewards.
And make an informed decision that aligns with your own personal investment goals.
Couldn't have said it better myself.
Well, folks, there you have it. Our deep dive into Goldman Sachs. Hope you found this insightful.
We did our best to break it all down.
And as always, if you enjoyed this deep dive, hit that subscribe button and the bell icon so you don't miss any of our future episodes.
We've got a lot more companies and market trends to explore.
Exactly. So until next time, happy investing, everyone.